So things are looking absolutely horrible for Tesla when out of all the companies within the S&P 500, Tesla is the fifth worst performing stock. Now, just to give you a bit of a comparison, when we look at the top 10 performing stocks within the S&P 500, even number 10, Hasbro, it's almost like polar opposites, right? Hasbro is up 22.61%, while Tesla year to date is down a little over 25%. So it's looking pretty bad. Now, this is the fifth consecutive trading session of Tesla stock falling down. And I kind of rang the alarms about this many times in the past. In fact, I recently made a video just a few days ago mentioning how we were at a very dangerous point for Tesla in terms of price action. Now, I want to go ahead and just provide a little bit more of an update from this previous video, as there's a couple of other things I want to go ahead and share. Number one, we recently just got a report on Tuesday showing what the demand looks in Europe, and sales are dropping like a rock, right? Sales dropped 45% for January, right? We're in February, but the report we just got was for January. That's how pretty much economic data works. And what we see here is that pretty much only 9,945 Tesla EVs were registered in Europe, which is down from 18,161 back a year ago in January, right? And now what makes this pretty interesting is that this isn't like an EV story where EVs are just not having demand, right? Because we see that overall electric vehicle sales jumped 37.3%, indicating that EV demand was strong, but just not for Tesla, right? Now, it's not just Europe. We also saw many individual companies out there, I said companies, countries, right? Like Germany, right? We talked about that in a video just a few weeks ago. Germany, Tesla sales are dropping like a rock. I mean, it's absolutely nuts how bad Tesla is doing out across the pond in Europe right now. I wanted to go ahead and talk about Tesla a little bit from a technical standpoint. We'll touch on some other things fundamentally, but from a technical standpoint, I wanted to share this shot over here, screenshot, showing that we actually fell below this green line, which is the 200-day moving average. Now, the 200-day moving average, it's a long-term technical indicator that represents the average closing price of a stock over the past 200 trading days, right? And it's calculated by summing the closing price of those 200 days and just dividing it by 100, right? It's not like crazy math. And typically, when a stock falls below that 200-day moving average, it signals potential weakness, right? Oftentimes, it's used as kind of like support for institutional investors, right? So lots of hedge funds, they'll look at the 200-day moving average and they'll look at this as kind of support. But we actually breached this area of support. And so a break below it kind of indicates a shift in sentiment from bullish to bearish, which could lead to further selling pressure. Now, we'll go ahead and touch on where I think Tesla could ultimately go. But before I touch on that, just wanted to also show kind of what we see on a point and figure chart. You don't really see a point and figure chart very often. Really, it's more popular with chartered market technicians or hedge funds who are implementing a bit of technical analysis. But nonetheless, the point and figure charts, right, they use X's and O's, not because it's, they love Valentine's, but just kind of like how they mark price action. And what's interesting is that it only plots when price movements exceed a predefined threshold, rather than updating with each time interval. And so when you're looking at a point and figure chart, the point is to really just look at how price action is doing and just ignore time, right? It's just looking at price action, right? Just like your traditional candles, these, it's showing what the price did for each day. X and O just is marked depending on the price action. For example, if there is a reversal of $3 to the upside, I'll start to mark in the opposite direction. For example, you don't see consecutive O or consecutive X's. And O's, by the way, I should have mentioned this earlier, are downwards, price action movements, and then X's are upwards. And so Tesla, and then, depending on the box size, if we have it at $3, every time Tesla falls down $3, I'll mark another O until we have a reversal of $3. Then I'll start, going to the X's, and I'll start plotting the X's. And so it's kind of agnostic to time. And the reason why, I know this was a long explanation of the point and figure charts, just because it's very uncommon to see this. And so I wanted to just break it down real quick. But it's really just focuses on the trend. And based off what I just said, right, O's being bad or O's showing downward price action, we see that the pressure for Tesla is there, right? Tesla stock is just fall. It looks like someone was up here at the top and just threw a rock down and it's just falling into the abyss, right? So that's kind of what I wanted to touch on from a technical standpoint. But as far as price action, right now, before I actually talk about this area right over here and my thoughts on Tesla, just a friendly reminder that if you haven't done so already, make sure to check out the links in the description below. I'm going to also pin it in the comment section because I'm going to go ahead and share a link to my free weekly market post insights. It's completely free, right? Every single week, I send out an email talking about what are things I'm looking at in the market. And so if you enjoy the content I post on the channel, you'll probably enjoy getting access to those emails I send out. Now, bringing things back to a technical perspective, one of the things I mentioned in a previous video recently was looking at the market profile, right? It measures really how time or how price was distributed throughout time. And one of the things I've highlighted, which is kind of this box over here, I want to kind of talk about again, is that we were falling down to this area where I call it the low acceptance time zone, right? Low time acceptance zone, rather. And what this shows here is that, price for Tesla, since it's been trading, hasn't really spent a lot of time around these price areas, right? So that means that there's low liquidity, right? And so when there's low liquidity, if there's buying pressure, well, it quickly goes up, right? Because it pushes the order books. There's not a lot of kind of this exchange between the buyers and sellers. Great, cool. Well, when things are on the downward trend and we're at this low acceptance point of time in terms of price, well, that's not good, right? And so the next area, kind of the next shelf, when we're looking at the market profile, is around over here, right? Like a little under 280. We also see that around in the past, this area right over here, a little under 280, ended up being a resistance. And with the principles of polarity, old resistance tends to become new support. And so if we end up seeing Tesla touch this area, that could very well be an area of support where Tesla starts bouncing up. But of course, we have to measure it, right? We have to see what ends up happening. Tesla could end up actually just breaking down these supports because, again, stocks don't have to adhere to any squiggly lines you draw on the chart, right? We always have to kind of touch on that. And also, we have to touch on the fact that it may not even reach that area of support. We may have things just reverse based on some crazy catalyst news. But the trend in terms of price, the trend in terms of the news for Tesla, it's not trending to the positive right now. And so we could very well see Tesla come back to this area a little under 280. And so that's kind of something that I want to just be mindful of, right? Maybe you want to mark that up on your chart as maybe an area where you may want to buy, right? Of course, I don't provide any buy or sell recommendations. I just try to share what's going on with Tesla and other stocks and in the market, and you should only trade or invest in whatever you see value in. With that said, one of the things I also want to mention is this post here from Troy Teslake on Twitter or X, and he mentioned that Tesla delivered 495,570 cars in Q4 2024. They came very close to 500,000, but didn't quite make it because of demand issues. Sadly, reaching 500,000 in a single quarter doesn't seem possible this year either, mostly because of brand sentiment issues. Okay. He goes on to say that this year's best quarter will likely be below 470,000. Ouch. But the situation seems to be getting worse, and soon even 450,000 might be hard to achieve. Wow. So, pretty doom and gloomy here, right? Now, I do want to kind of mention this is not to be like a whole doom and gloom video about Tesla. And, Troy Teslake, although he does great analysis for Tesla, he is wrong sometimes, right? And I kind of want to point that out, right? He posts, if you follow him, every time he gets things wrong, he'll go ahead and call it out. His margin of error rate is 1.4% for Tesla's production and 2.6% for deliveries. So he is wrong in the past. He's been wrong in the past, and maybe he could be wrong in the future. But just kind of want to provide kind of this perspective that someone who's been very accurate with calling out what Tesla's doing fundamentally is kind of spilling out a kind of a story that is horrible, right, in terms of fundamentals. And we all know that eventually, price could deviate from the technicals very often, but throughout time they end up regressing towards what the fundamentals say, right? And that's why, when you're investing in a company, you want to be mindful of what the fundamentals are, because eventually price will get back to reality and what the company is actually doing. So kind of just wanted to mention that. Now, I also saw this on X. This is, a bit anecdotal, but kind of, points to what's been going on. For example, so this is a video of someone who's driving by a showroom for Tesla, like a brick and mortar location, and he mentions that there's like a security guard there guarding it. And this kind of makes sense, especially since recently we've been seeing so much vandalism on Teslas, also on Tesla superchargers. I mean, for God's sakes, we even had the Tesla official Twitter or X page mention it, how they're going to be prosecuting individuals who vandalize their supercharging stations, which by all means, absolutely, right? Vandalism is not good. But this is not a video talking about whether vandalism is good or bad, right? That's not the point. The point is, we're having Tesla now have security guards guard pretty much their cars, and that kind of just tells the story that, look, sentiment is so bad that they have to do this, and that's not good, right? So, from a sentimental perspective on the brand of Tesla, things are declining and waning. Fundamentally, we're seeing deliveries decline in multiple places. California, the most, if we're talking, domestically within the states. Also across the pond in Europe, Germany, it was bad. France, all these places are bad. And so that's kind of the fundamental picture. We're not really delving into the macro picture for this video, but in terms of technicals, also not looking good. But again, at the end of the day, this is just a video to provide some insight, some things I'm seeing for Tesla. You guys are free to do whatever you see value in, and if this is a time where you want to buy, then by all means, go ahead and do whatever you see value in. With that said, don't forget to check out that free link for the free weekly market pulse insights, and check out this video right over here, and I'll see you guys on that next video. Take care, guys.